welcome back. Now let's look at the types of business entity. There are three types of business entity. We have the sole proprietorship, the partnership, and a company. In this chapter, we'll look at sole proprietorship. So what is a sole proprietorship business? A sole proprietorship is a type of business entity that is owned and managed by an individual who is known as the sole proprietor. In a sole proprietorship business, the sole proprietor is solely responsible for the provision of capital that will be used to run the business. He must source for the funds to run the business. If he doesn't have the financial buoyancy, then he either borrows from friends or relatives or from banks. The point is that in a sole proprietorship business, the sole proprietor is responsible for funding the operations of the business. The sole proprietor is responsible for running the affairs of the business. He has to meet with marketers. He must meet with suppliers and consumers, and also must engage in every other activity to ensure the business continues to flow. Therefore, he is solely responsible for the entire operation of the business. He enjoys the reward attributable to the business alone, and he suffers the risk attributable to the business alone. Okay, what are the advantages of a sole proprietorship business? The most important advantage is control, which means that the reward or benefit attributable to the ownership of the sole proprietorship business flows directly to the sole proprietor. He is the alpha and omega of the business. He doesn't share his control. He owns the business solely. A sole proprietorship business is simple to establish. As a matter of fact, all you need to establish a sole proprietorship is your capital, rent a shop, and decide on the product you want to sell. Then you're good to go. There is no need for heavy documentation, registration with the Corporate Affairs Commission, or any other government agency. It is very easy to establish. Finally, is that he enjoys all the reward alone. Now, let's go on to the disadvantages of a sole proprietorship. The major disadvantage is he bears all the risk, and that is what we call unlimited liability. This means that in case of heavy losses and liabilities, and if the sole proprietorship business does not have sufficient cash and liquid assets or non-current assets to settle the liability of the business, the sole proprietor will have to bear the liability. The sole proprietor might even go to the extent of selling his personal property to settle the liability of the business. Therefore, the liability in a sole proprietorship business is unlimited. It goes beyond the capital you have contributed. You will not only lose the capital you have contributed, you will also have to contribute or present your personal property to suffer or to settle the liability of the business. Another disadvantage is excessive workload. He has to attend meetings, and in that meeting he is the secretary. He must ensure he keeps proper books and accounts. He is the accountant of the business. Sometimes he's even the lawyer of the business. He has a lot of responsibility on him. He is the marketer. He has to do a lot of work to ensure the business keeps running. And more often than not, most sole proprietorship business don't have the sufficient capital to employ qualified professionals to man respective positions. Therefore, they have to carry it on alone, which results in excessive workload. Finally, is perpetual succession is not guaranteed for a sole proprietorship business because the death of the sole proprietor might result to the end of the business. So thank you very much. See you in the next chapter.